When you have to worry about your day-to-day expenses, your fuel costs, your housing costs, your utility costs, your grocery bills, then the last thing that would come into your mind is savings and investing. This is exactly what's happening in Canada. According to BMO's recent poll, 62% of Canadians are using TFSA. This is declined from last year. Last year, it was 66% of Canadians that were using TFSA, which means tax-free savings account. Okay, the peak was in 2018 when we saw 69% of Canadians were using it. So it is constantly declining. Why? Because Canadians are finally feeling the pinch of higher living cost, higher inflation from their pocket, where they are not able to save enough money, use TFSA anymore, because their disposable income is not enough to cover up the expenses. So they're tapping their savings in order to cover up the expenses. This is the situation of an average Canadian these days. Okay, and in that survey, I saw one statement that actually hit the nail on my head. It says Canada has an economy of $2.1 trillion, but the value of our outstanding mortgage has just hit $1.96 trillion. So think about that. At a point, our outstanding mortgage amount will actually going to exceed the country's GDP, the nation's entire GDP amount. I mean, this is a profound statement. I've just read through it. I was blown away from that statement because our mortgage debt is so high, it's about to exceed our country's economic capacity. Think about that, okay? Another article I read this morning, and according to that, one of the major business groups are saying that Canadian government is not able to hit their fiscal goals in 2026 and 2027 year. Why? Because they have been consistently missing their targets. So they say we're going to spend that much money in this year, but they always increase that committed value. And this has been a consistent track record of this Liberal government under Trudeau and Freeland. And if you have been my regular follower, you know that fiscal deficit spending is one of the major sources of inflation in this country, because when you run fiscal deficit on consistent basis, you're basically borrowing money from the market to spend into the economy. Okay, and that is new money being printed and pushed into the economy. This is always inflationary, and that borrowed money is a gap, right? It needs to be covered by some other sources, most likely taxes. So you will see the taxes will continue to climb up because the government is spending like drunken sailors, right? So if you look at the track record of this government, we have seen that they have been consistently beating their own forecast in terms of fiscal deficit, and even the projections going all the way to 2026, 2027 year, it doesn't look like they are going to bring that fiscal deficit back into the order. So if the fiscal deficit is continued to balloon, mind you, next year is election year, and it's highly unlikely that the government will put any strains on the fiscal deficit. It will most likely will continue to further deteriorate. This will put a lot of pressure on the inflation side as well as the tax increases in order to cover that spending. Okay. In regards to housing, I saw another news where the National Bank Terranet Index also shown a 0.5% month-over-month decrease in the month of December. So this Terranet Index actually monitors 11 major cities across Canada. Out of those 11 cities, we have seen decline in the 4 cities. But I've read one statement which is very profound, and I want to quote it to you. According to that, for months ahead, prices should continue to decline despite the support of historical population growth and the shortage of housing supply, because the deterioration in the labor market is set to continue. This is profound, guys, because I also covered this in my previous video when I talked about the Germany real estate market, because Germany has also been suffering with structural housing shortage for 2 decades. 2 decades. And yet they're seeing their house prices are collapsing, even though they have influx of immigrants for the last 20 years as well. So this is the biggest myth that you always hear from real estate bulls and realtors, that the housing market will never crash because we don't have enough housing supply. We have structural housing shortage in this country, which will always provide the floor underneath the housing prices. Yet this statement is also validating my point that because of the weakness in labor market, if you have unemployment goes up to 8%, you have people worrying about putting food on the table, nobody will be buying houses in that scenario. So because we have seen the weakness is going to deteriorate in the labor market, this will put a lot of pressure on the housing market because people will not have purchasing power. The affordability will not be there to provide that floor for keeping the housing market sustained. Okay. Anyway, this was a mouthful. I just wanted to give you some updates in terms of what's happening. So this week, Bank of Canada is going to announce their monetary policy review, and my guess is they will keep the rates at this level. They're not going to increase it. They're not going to drop it, because we saw the retail sales data, which is also very weak. We saw the housing data is very weak. But as soon as they announce rate cuts, it's going to send a narrative, a sentiment that the Bank of Canada is kind of taking a back seat that would further accelerate the inflation, because December inflation data was 3.4%, higher than expectations. So I don't see they have any grounds to cut the rates at this level. So they will keep the rates as it is, provide all those evidences. We are seeing some stickiness in the core inflation. We are seeing some weakness in the labor market. So we will keep an eye on this, and that's why we're keeping the rates as it is. I think that will be the speech from Tiff Macklin, but this is just me talking. So anyway, you let me know what you think about it. Put your comments down below. Let me know what you think about it. If you like this video, give me a thumbs up, subscribe, and I'll see you in my next week video. Thank you.